The forex market never sleeps, and neither do I. So let's go and see what today's charts have to show us. Now, if you're new to the channel, my name is Nick, and I'm a top author on TradingView with over 260k reputation points, and every day I share a lot of free education and analysis for all of you. So make sure that you subscribe to the channel, and I will see you on the charts. In today's video, I want to speak about EURUSD. Now, why do I want to speak about EURUSD? First of all, because it is the most traded pair in the market. And as usual, what I will be doing is providing a complete multi-time frame top-down analysis. Starting from the higher time frames, we will then go down on the lower time frames. We will also check what we have from a COT perspective. So commitment of traders, which is basically what hedge funds and the non-commercials in the market are doing. And by the end of the video, by using the combination of these different types of analysis, we will try to understand where we have the highest probabilities for a potential move here on the pair. Now, starting from the monthly time frame, what we can see is that the market has just created a strong impulse to the downside. And in a situation like this, what we can expect is for the market to provide a correction, basically for the market to go and retest this previous monthly support here, and again support here, which now that the market has broken it to the downside, is turned resistance. And we do expect the market to reject it to the downside. So here in the monthly, we can expect some short-term bullish price action before then longer-term continuation to the downside. Dropping down on the weekly time frame, what do we see? Now here in the weekly, we can see a very similar scenario. We can see the impulse to the downside followed by the start of this correction. Now in general, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the high to the low of the impulse. And if we do that, what we can see is that the market has just created a 0.32 Fibonacci retracement, lining up perfectly with this previous weekly support, which is now turned resistance, that is currently creating a confluence of resistance at this area that we do expect the market to test and then potentially to reject to the downside. So also here in the weekly, everything seems quite bearish. Just a quick thing, make sure that you like the video, subscribe, and let me know in the comments any suggestions for new videos. We go down on the daily time frame, and what do we see now? Here in the daily, we can see how the market has just created this W formation here. Now, generally speaking, after the creation of a W, what you want to see is the market create a move to the downside to go and complete the W formation at the previous resistance turn support, which is the neckline and completion zone of the pattern itself. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is basically what the non-commercials and the biggest speculators, so basically hedge funds and the big players in the market are doing, what we can see is that lately net positions have been dropping massively. In fact, we went from having 12k net positions, so basically way more longs than shorts, with 189k long positions and 177k shorts, all the way down to having a quite negative net positioning with minus 22.3k net positions and 24k shorts added with the last report, bringing the positioning to being 219k short positions and only 196k longs. So definitely way more shorts than longs, which obviously makes EURUSD quite bearish. So how we will be approaching this potential short-term shorting opportunity here with students? Now, as usual, we will be reactive and not predictive. We already know that from the monthly and weekly, more continuation to the upside is definitely a possibility before then seeing the continuation to the downside. But we do know that we want to see the completion of this W formation at the neckline. So with students, what we will be doing is monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday bullish market to an intraday bearish market. Why is that? Because monthly, weekly, and daily combined with the COT data are the best time frames from a directional perspective. However, when it then comes to confirmations and entries, the best time frames are the intraday time frames. so 4-hour and lower. Therefore, with students, during this move to the upside, we will be waiting for the market to shift from an intraday bullish market to an intraday bearish market, and only if the market will shift from a bullish to a bearish market, at that point we will be adding EURUSD to our watch list, and as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a good risk to reward and good probabilities at that point for the move to the downside and for the market to complete this W formation at the neckline, which is this previous resistance, turned support here from a daily perspective. If you enjoyed the video, make sure that you smash that like and comment below. It really does support the creation of more free education analysis for all of you. You can also go and check out the mentorship program. The link is in the description. It's a very complete program. First, you learn all the rules of my rule-based strategies. Then you get a new daily market breakdown every day showing you how to apply the strategies in actual real market. And you also get your questions answered every single day in the daily Q&A session. So it's a very complete program. I suggest that you go and check it out. The link is in the description, and I will see you in it.